What's going on, guys? Welcome to today's class, guys. Hope you're having a great day. Today was a great trading day in the chat. It was a very productive day. Now we want to speak about, obviously, everybody loves to make money, make 1K days, 2K days, 3K days, 10K days, 50K months, whatever your goal is with money management, right? But if you miss the one core principle of there's five different pillars to become profitable. If you forget these, this pillar right here, which is about risk management, you will burn your money, you will lose your money, and you will literally be running on a freaking hamster wheel if you don't understand risk management. So basically, in today's class session, we're gonna basically break down today how to properly master your money, how to cut your losses quicker, how to hold your winning trades for longer, and how to basically keep a system on your trade. So whenever you're in a trade, we're gonna be covering trading stop losses and essentially how you're able to control your risk and keep a certain threshold of profits on your trade so you're able to enjoy your lifestyle while your money's still being protected. All right. So let me go ahead and share my screen, get everything in motion, and let's get everything started. All right. Boom. So, guys, first things first, we're going to be speaking today about managing your money. All right. And then just like the importance of everything we're going to cover. So, the biggest thing here, guys, is when you talk about managing your money, everything with risk management is like probably the most like discipline and risk management go hand in hand. So, the unseen enemy in trading, guys, is not about like Donald Trump and the war and the news. No, it's losses. As you guys know, you're gonna have wins and you're gonna have losses whenever you're trading. But now these losses, they could simply devour your trading profits and make like you could be guys. How many of y'all had like days upon days, maybe even a weeks or a couple of days in a row of just green days, and then one losing trade comes through and wipes away all your profit? If it happened to you, man, put a one in the chat. Now, honestly, who's that happened to before? Man, you were making money Monday, Wednesday, Tuesday, Thursday, and then Friday, one wrong trade, boom, now you're back to where you started on Monday. How many have that happened to before? Look at the ones. See ones in the chat. Yeah, this is what counts at the game. If you guys understand this concepts today and everything that we're going to cover, it's going to help you guys basically maximize on your winning trades. When you have green days, you have bigger green days. And then on your losing trades, instead of giving away all your profits for the week, you could actually take a loss as a grown man or a grown adult or grown woman, and it won't deteriorate your whole profits for the week. And then after you look at your portfolio of a month spectrum or a year spectrum, you'd be actually pulling in more money, not because you're making more, but you're controlling the downside. So we're gonna be speaking about the hope trap. That's the first thing. So holding on to a trade, hoping it comes back, and that's like pretty dumb to do if it's hit your stop loss area. All right. Like I said, one loss, many wins gone. Us over leveraging. And y'all want to know how you can predefine your risk and then your exit. We're gonna be talking about that all throughout today. So obviously, cutting the losses is going to make your trading career and your lifespan as a trader, as far as becoming successful, become for you a lot more quicker if you're able to put these systems into play as soon as today. So today we're going to be speaking about the first thing, which is called the trailing stop loss. How many of y'all have been, interested to learn more about trailing stop losses, how that works, and you might, have a couple of questions about it? Just put a one in the chat. All right, yep. Gotcha. So look, today we're gonna actually do a live example of the trailing stop loss, so you can actually see in real time and for yourself how to use it for yourself. And number two, how to set it up so when you're in a trade, it can help you control your margin of profit and your margin of loss. So people who are not basically familiar with trading stop loss, it's imagine like you're how can I kind of put this right? And then they make this kind of simple. Imagine you're in profit like $500 on a trade, right? Let's say that you don't want to like let's say you have $500 profit, right? Some people they're watching the market, they're watching a chart. Let's say they're watching like let's say what IWM today, for example. All right, don't mind all these lines here on my screen. So let's say if you're in profit, you're in an IWM trade. Let's say that you bought some calls, guys, on IWM, like somewhere down here, right? Let's say that you bought some calls here on IWM. Let's say you bought calls right here and we went up in price. Now up here, you're sitting on a profit right here of a total profit of let's say $500 profit, right? Now, some people's issue is right here, they're up $500, but their issue is they're not going to take profit at the meat of the move when they're trading. They're going to take profit on their trade once they feel like it's going against them. So instead of taking profit here at 500 bucks, someone will make the issue to hold this trade, and then we have this massive candlestick right there, boom, and then number two right there, boom. Now right here, you're at a profit of how much? A grand total of $162. Someone's like, oh my gosh, I could have just took 500. I could have just paid my phone bill. I could have just paid my insurance. But I'm over here walking away with a freaking steak dinner and maybe a bottle of wine if I'm lucky, right? And they're probably thinking like, bro, why did I do that? But we're humans, so you can't really just be beating yourself up. What you want to do is create systems for yourself so you can basically maximize on your trade and have a margin of profit that you cannot basically go under. So what happens with a constraining stop loss? Let's say you're back here at a profit of 500 bucks. All right, let's say if you put a trailing stop loss here of 10% on my trade. 10% of $500, guys, I'll show you how to do it real fast. 500 right there, 0.00. Move the decimal point right here to the left one time. Your 10% on $500, guys, is a total of $50. This is basically 10% of 500, right? 50 bucks. So now if I have a trend stop loss here of 10% on this trade, once this company, IWM, has the slightest drop right here, and the price goes from 500 bucks down to now 450, because like a 10-point stop loss, 10 stop loss, I'm gonna immediately be pull out the trade somewhere in this range here of $450, maybe like 400 and like 48 or 47, like somewhere in that range where you're only gonna be making on a trade now $447 or 450 bucks. So instead of having to hope and find the best possible exit and be the Wolf of Wall Street, after you're in a good amount of profits, guys, do you want to like basically defeat natural human psychology and wanting to have more and more and more and being greedy? After you put in the trailing stop loss, you can then control your risk so you're not able to lose more than $50 and you can go home with guaranteed profit rather than a guess profit. Because I'd rather have my systems in, so I have peace of mind. I got a weight off my shoulder. I know minimum on this trade, I can go home minimum with like $450 or a little bit less after fees and taxes. So now how do we do that? Let me go ahead and share my screen here on my phone. I'm gonna just walk through. And I promise y'all it's fairly simple. So if you have questions throughout this session, just go ahead and text them into the chat. And then we'll spend time to do a Q&A after this breakdown of the trend stop loss. Now that we, showed you guys how to use it, how to actually, what it means and how it works. Again, now I'm gonna show you guys how to use it on a broker. Now, can y'all see my screen by chance, guys? Is my screen already working? Just let me know if my screen share is on. It's on. I bet it's on. Hope everybody can see it. Y'all go see the screen? Only one person that said yeah. I make sure everybody's good because I'm doing this breakdown for you. All right, got you. All right, cool. So let me show you guys how it's gonna work. So just now, we did pretty good today. I'm not gonna show you too much of the portfolio on this account, but we made about 4 grand today. Mainly trading Oracle as my main hitter today. Not cool. Now, even though I like this company to go to the downside, I'm still a risk manager at the end of the day, and I wanted to make basically about 3 grand today. So I went past my goal over like $1,000+ So instead of doing a swing trade on Oracle with a bunch of positions overnight, I'm gonna lock in these gains here at the 4K so I can make profit, and keep it as a risk manager. And I only did like a small one contract swing trade on Oracle just because I'm just like, if the move happens, I want to at least be in there somewhere. So let's say I'm in this trade. Let's say, all right, do y'all see here at the right here that Oracle cost me $162 right now per contract? Y'all see that, right? All right, so now let me say that, you know what? Because we're sitting at 162, let's imagine that this 162, guys, is like a very important 162 to me. Like, I need that 162, but I want to go play basketball. I'm going to go talk with my colleagues. I'm going to go to the beach. I'm going to relax. But while I'm relaxing, I want to have safety now in my trade. I'm going to go to click it like this, click on the trade. Step two, click right here, sell to close. Hit it right there again, sell to close. Go here to your order type right there. Click on the words limit right there. And you're going to scroll down and you're going to see right here, the fifth one down under simple orders, the words trailing stop loss. When you see that, you're going to click it. The next step, now you're at the order screen of basically placing your trailing stop loss. So you're going to scroll down right here, down to the dollar sign, button right there, and then change the dollar sign, click that, And after y'all click the dollar sign right there, as you can see, it should now change it now to a percentage. All right. Now I'm going to tell you guys why this is super important to do the percentage over the dollar, right? So what's going to happen is, as I mentioned to you guys, the 10%, situation whenever you're trading, right? Now, for me, I used to have to just do everything mental, and it wasn't an issue. Like 162, 10% on 162 is $16. So I do 162, you know, 162 minus $16. My stop loss would be $146. So, guys, previously I have to do quick math, go over to the regular stop order, and change this now over back to 146 to keep my trade protected, right? But now for us guys, we have the blessing now to be blessed now with a trailing stop loss immediate feature. You can literally click right there, makes it way easier for you. Go here to the dollar sign symbol right there, change the percentage, and then put 10 right there. Bada bing, bada boom. So now that this company, guys, is at $163 right now per contract. If and what happens if this company moves down 10%, let's say we're at 162.5, 10% of that is going to be, I mentioned, about $16.25. So 162.5 minus 16.25 is a $146 on the trade. Cool. Now, guys, I'm going to tell you why AI is taking over the world and why you want to relate to your trailing stop loss as AI. So imagine, guys, you're at the beach, you're at the coffee shop, right? You at dinner. You just kicking with your lady. You laid up. You might be watching some Netflix, or maybe you on vacation in Costa Rica. You catching tequila shot. You know what I'm saying? You just chilling, living life. Now imagine you have a robot that when they're in this stage living life, they're going to be watching your trades and managing your money for you while you don't even look at the screen. That's how you want to imagine a trailing stop loss. Because if this trade, guys, were to appreciate from 163 to 170, they're going to calculate the 10% off of that 170. So what that means is now, let's say now we're at 170 now for this trade. So we've made a total of extra of $8. So cool. 10% of 170 is 17. So 170 minus 17 is now 153. So as you guys notice, as the trade appreciates, so does this right here, which is your guaranteed profit. Your guaranteed profit will also follow you like a line. So let's say like you're imagining like you go on a freaking note sheet, right? This is where you are, right? You're sitting here at 162.5, and then you're guaranteed, so that your take home guaranteed. I can't spell, I guess. Guaranteed is 146, right? Then let's say now your price appreciates now, right? Over to 170. Now, you look right here, now your take home guaranteed, I'm gonna just say THG, take home guaranteed, is now 153. So when y'all look at an actual chart, you look at the actual screen. I'm gonna show y'all my screen. Oh my gosh, it's so blurry. Hold on. Man, whoever made the iPhone, they're kind of doing this on purpose. Like, I don't know if it's just me, but why did my camera be blurry for no reason? Like, it should not be blurry. All right. So let's say we're looking at this company, right? So we're looking at the market. You're in a trade. You don't have time to watch the market do all this and all this all day, right? Some people have the time to do that. Me, I don't have time to do that sometimes, I want to make my profit and I want to chill. So the price is going from right here, which is right here, at 162, right? Your stop loss is like a chasing bull right here behind it. It's keeping you safe. It's keeping you in the trade, but it's making sure that as the trade goes up in price, it will also follow you like this. So if and when the price comes up to a point where your trailing stop loss will actually intersect with that 10% margin of risk, right here, boom, they're gonna take you out the trade. Right here and right there. So there's pros and cons though, because let's say it goes down like this and it goes back up in price, right? It took you out the trade. So you can't bank off of this profit. But now what if in a different reality, this happened? It went down, up, and it crashed. The trailing stop loss, what did it do? It kept you safe. So now you're able to lock in your gains and then not be a part of all of this bloodshed right here that happened. So whenever you're trading, you're gonna have to understand that how you base your trading stop loss is gonna be linear to where you are in your trading profits and your trading career overall. Because if your trade's up like 200%, 150%, I'm not gonna put my stop loss at 10% because I know it could possibly go higher. Because I have more profit, I can now afford to have a deeper stop loss, right? This right here is a 10% stop loss because I only, I'm just in this trade, maybe up 20% or so, right? But let's say I'm up like 50%, 60%. My stop loss would probably be like 12, 15% because I want to have a more of a margin of error. And in case it pulls back on me and there's more of a trade to go, hey, I'm already in profit 65%. So it's okay. I could afford to have a deeper stop loss because I could possibly capture, a bigger part of the move. So now when I look at this other chart right here, y'all gonna be seeing this is like what you're gonna be seeing a lot, guys, when you're trading. Well, guys, we'll answer some questions, guys, in a second. So yeah, if you have any questions, guys, about stop losses, anything literally at all, just post them into the chat, and that's we're done with this breakdown. We'll then answer your other questions, basically, person by person. All right. So boom, the next thing is going to be holding winners longer. This is the engine of growth. I'm going to give you guys today a simple indicator that I use, and I've been speaking about this past few weeks. And I know some of y'all been catching on now. It's a secret indicator, not even really secret. People just don't know about it, right? How to really use it. This strategy is going to help you hold your winners, let them run, and you're losing trades. You know when to cut them on time, so you're not taking unnecessary losses. Right? This is going to be using the 9 moving average, which is a very simple indicator on TradingView. So if you go to your trading right here, guys, go over to the indicators tab up here. All right, these are the list of my favorite like indicators that I use right now. But all you're gonna do for the 9 moving average, guys, you can go right here. You're just gonna type in EMA. So EMA. And what happens here is you have the moving average exponential. So you're gonna click that right there. And now you see this big blue line here on your screen that's showing you like how a market's basically holding up and what's kind of happening on the stock. Now, what you're able to notice, guys, is this blue line. Basically, all it is, guys, the 9 moving average, it says that if you are above the blue line, the 9 moving average, you should be looking to, for a continued move to the upside. And, once you tap this blue line, as you can see right there, you look for a move back to the upside potentially. So you're buying bounces, Every single time I tap in the line right here, as you see right there, we bounce. Tap it right here, we bounce. Hit right there, we bounce, right? Now, what happens if you actually you start to actually close below this blue line? That means that the trend is starting to begin to reverse a little bit to the opposite direction. Now, sometimes y'all can see as you go up higher and higher on time frames, this 9 moving average holds on higher time frames than others, right? This is my 15-minute time frame. As you can see, we didn't close one candlestick at all below this 15-minute 9 moving average until right here. And once it closed right here, what happened? We had a pullback to grab liquidity, it came right back down. But on your 5-minute chart, you may have got faked out. So we're bouncing right there. You could have bought calls, held them, bought calls here, held them, made profit, boom. But then right here, you close below this 9 moving average. So you might be thinking, this trade could be over, and it could actually keep on bouncing. Essentially, it's an indicator, guys, that helps you be confidently into a trade whenever you're holding on to it. Like yesterday, for example, guys, we smacked Oracle pretty good to the upside, right? Now, if I look at this company, guys, what's one thing that y'all notice here, guys, with the 9 moving average? Someone tell me into the chat. What do y'all see is happening here on Oracle yesterday? This is a class act scene of the 9 moving average holding. What do y'all think, guys? I want to see some more y'all answering questions in the chat. Like, what do y'all see is happening here with the 9 moving average?
It's holding pretty good. The 9 a.m. It's a respect line, Brian. That's for sure.
100%, 100%. Anybody else got anything to add? I
Yeah,
just
it's using it as a support.
come on, yes sir, yes sir. Other things that people can
Also,
react
what?
to.
Also, Ryan. Sorry to interrupt. Also, I don't know. What do you think about the BWAP? Because sometimes I use it similar to the 9 EMA.
Yeah. We'll talk about VWAP too. I think VWAP is cool. I'm gonna show y'all. This is the VWAP right here. It's not bad. You go right there, go to your settings, you change the lower band, upper band, whatever, make it just a VWAP line by itself. Say I made the color like yellow, for example. It's not bad, but in my trading career and experience now, I realize that for me, it's almost irrelevant because the non-moving average is basically all I personally need. And then also, it's like you want to learn how to trade without indicators. The indicators are just basically icing on the cake. So I have too many things on my line that are made that immediately beneficial. I kind of want to just take it off. Now, it's not a bad indicator, but as you can see yesterday on Oracle, it didn't really do anything. Like it just there. You know what I'm saying? It just happens to be there because it's on my chart. But if I cancel that and I look at the non-moving average, what do I see? The market's holding that non-moving average very cleanly. The only time that we have opportunities to buy stocks, guys, when it's trending like this, guys, is on retracements, right, and pullbacks in price. So what you want to go to do, guys, is combine levels of confirmation. For example, I have a fair value gap right here on Oracle, right there, right? You pull that across, what do you see? We make a pullback to Oracle into this fair value gap, also above our 9-month average. And if you want to add some icing on the cake, go to your tool here, a Fibonacci right there, and click at the very top of the fair value gap to down to the very bottom. Now, what you're going to see when you do that, guys, is basically two different levels. All right, two different golden pockets. Listen right here, guys, as you guys know, is my liquidity right here on the sell side, right? This right here is my liquidity here at the buy side up here. So, guys, if you're in a bullish market, if you pull back into the bottom portion of your Fibonacci, which is the golden pocket, guys, the golden pocket is between 0.236 and 0.382, or it's between 0.618 and 0.786. Right, those are two important golden pockets. Hopefully, y'all writing that down. It's some good game. Y'all already know. So now, if you're not one of our strategies, guys, it's about these things combining together, which is one, a fair value gap being built. Now, guys, not any fair value gap, right? It has to be a fair value gap that's being built, that's creating a new high, or that's creating a new low. Write that down too. So as you guys can see right here, we dropped here on price. We created a new high, and as we created this new high, we also created this fair value gap. So what you're going to do, hey guys, is we're going to draw that gap and don't chase this company and try to buy calls up here. No, wait patiently to see if we can make a pullback into this gap, specifically make a pullback into the bottom portion of the gap, which is sitting exactly down here, right? Now, when that happens, as you guys can go ahead and see right here, wait, a little closer. Oh, look at that. As soon as it tapped the bottom portion of this Fibonacci, it figured out to a smaller time frame what happened. We closed here as a doji candlestick exactly at my liquidity here at the sell side, which is down here on my Fibonacci. When that happened, this is your symbol that hey, the market isn't good for calls. Now, as you can go and see, guys, we're below this non-moving average here on the 1 minute time frame. Yes. But if you look at the 3 minute time frame, which is the time frame of where your fair value gap is, and like a longer term trend for a day trader, we've never closed below the non-moving average one time. So make sure, guys, if you're using this non-moving average, you're looking at different time frames. That is a guarantee, as what's the word I'm looking for? Not a guarantee, but that's a prerequisite. You have to be looking at multiple time frames with the non-moving average, or you'll fail because you're just looking at the 1 minute time frame or the 2 minute. Like, nah, you got to use this strategy right here, guys, for a trending market. Number one, look for a fair value gap. The gap must be taking out a new high or a new low. Step two, draw your tool here at Fibonacci on the fair value gap. Step three, wait for a retracement into the other level of liquidity, which is the deeper golden pocket for you. So if I'm in an uptrend, I'm looking to tap down here in green, which is my liquidity here, SSL, which is my sell side liquidity. If I'm like, below this gap, for example, I'm going to target up here, which is my buy side liquidity, right? So because guys were above this gap here on Oracle, I'm be targeting the bottom portion of the gap right here. This is my entry point. So we will buy our calls, buy our stocks, buy anything right there. Guys, this also does work within other markets like futures and like people have told me that see that's worked. You put your stop loss, guys, at the very bottom here of this fair value gap or the bottom of the quarter pocket, and then you target on creating a brand new high above this previous structure right there, this previous higher high here on Oracle, as you can see right there. And as you can see, this is about a 10 to 1 risk to ratio. So I could lose this trade, guys, 9 times, lose $9, hit it one time, make $10, and still make a profit of $1. So you could lose literally 9 trades hit one, and still be in profit. And this is called a profitable trading system. As you guys can see here on Oracle, without further ado, companies shot up crazily. Now, someone might ask, Ryan, that sounds so easy and so clean. Like, do you even trade with the strategy? Well, if I look at our call outs yesterday that we made here on Oracle, what you're able to see, guys, is we did them Oracle calls. We actually took them on Discord. I was at like 9:15. I got to see my broker when I took the calls on Oracle. But yeah, it's basically, yeah, 9:15, 9:15. Right here, this pullback here at 9:15 on Oracle on this lower retracement into this gap, into the 9/11 average, above our levels of Fibonacci, the golden pocket. Just multiple things happened at once, target move to the upside. And I think I took profit kind of early because Oracle literally did this for the rest of the day. And they went up even more in after hours. You can just go and see this is Oracle going up some more. And then they printed today, and then they printed in after hours pretty crazily up a ton. Y'all can go and see Oracle prints like crazy. Now, someone might also ask me, Ryan, why did we make money on Oracle puts today? Like, what drew us to take puts today on Oracle? Well, I'm gonna show you that as well. Basically, guys, this level here in red, I want to see what you guys say. But guys, what do y'all call this level here in red? What would you guys call this as on Oracle? This level right here in red. What do y'all think that is?
Pre-market high.
Close, close.
Um,
I'm gonna give y'all 15 seconds. I see some right
Draw
answers.
liquidity.
Okay,
Resistance.
okay. You got 5 more seconds for. I want everyone to jog the memory and just think for a second. What y'all think it is?
Previous day high.
Liquidity area.
Yeah. The answers, yeah, exactly. Well, basically, yeah, this right here was a high of the day on Wednesday. Now, this high, guys, isn't just any high. This high was like the finale of the strong move to the upside on Oracle. And when companies try to close above this high the next few days, we had hit it right there, had a strong move back to the downside, and the company came their ass right back down to where they started and even below. They came even below to where they started, right? Now, y'all want to mark this level up on your chart because you don't want to mark the wicks, guys. You want to mark the body, the significant body, right? If you guys see here on the 4 hour time frame, this is a significant high here on the 4 hour time frame. If you go over to your daily chart, guys, on Oracle, the actual high on the daily chart was sitting about right here on price. So if I draw it right there, guys, on Oracle, right there, press Alt plus H. I'll make this line here blue so we can differentiate that level. So now what you're able to see, guys, on Oracle is this morning we came here in the market this morning in pre-market. Let's see what happened on Oracle. Look at that. Boom. We shot up here in pre-market, guys, and actually took out that 4 hour high and also took out that high on the daily. And as you guys can see on Oracle, as soon as the market opened, started seeing some heavy moves to the downside here on Oracle. After some chop, obviously, we came up to my pre-market highs here on Oracle. Right there, you can go to draw right there. Now I can go ahead and see we closed a tiny candlestick right here above these pre-market high. Now, once that happened, guys, people in the market are thinking like, oh my gosh, we're bullish. We closed above pre-market highs. Buy. Oracle part three. Oh my gosh, time to get paid. But what you don't realize is we have a very, very, very small candlestick right there above pre-market highs, which is basically looking to trap liquidity, and this is called a liquidity hunter, right? And Mills, to your question, you're gonna be buying calls at the liquidity on the sell side, and you're gonna be buying puts at liquidity at the buy side. Now I kind of just back it up with the information so you can see it real quick. But essentially, for everyone who doesn't know, liquidity, guys, is just basically money. Like whenever I say someone's turned into liquidity, someone has lost their money. And when someone loses money, we can actually make money. That being said, guys, in a bullish market, you buy from the sellers under the lows at the sell side liquidity. In a bearish market, you sell to the buyers above the highs at the buy side liquidity. All right. This is how that works. Now, the market, guys, it moves off of three levels only three things only, either highs, lows, or fair value gap. So you have two different forms of liquidity, and I don't want to confuse you. I hope this is making sense. You have the external range liquidity, and you have the internal range liquidity. So The external range liquidity is higher highs, lower lows, lower lows, higher high. All those lows and highs, guys, are all levels of external range liquidity. Now, our fair value gap, guys, is the internal range liquidity. So once you can understand how to use the fair value gaps to your advantage and market structure, which is finding the higher highs and higher lows in the market, you know what you're doing, you are now a threat to the market. So you can see here on Oracle today, we closed barely above our pre-market highs, and then we started to see a movement like this. Started dumping and dumping and dumping, right? Now, as we're dumping, guys, on Oracle today, we started to drip a lot more below this key level of price that we're referring to right here, guys, which is our high in the 4-hour and a high in the daily chart. So what I did, guys, I put my tool here at Fibonacci on the same gap here on Oracle in the 5-minute. And what I can see today on Oracle today, guys, we start making moves to get upside here on Oracle. And we even tested this level of liquidity right there, as you can go ahead and see right there on Oracle. Y'all see that, guys? We tried to close so hard above this golden pocket. This is called my liquidity, guys, on the buy side. So buy side liquidity. The top portion, guys, of your Fibonacci is the buy side. The bottom portion is your sell side liquidity. So as I mentioned, guys, because we're in a bearish market, we would be looking for retracements at this key level and this key pocket right here on Oracle, right? Now, let's play here on Oracle more. You can see that we cannot close above that key level. So I tell you guys, when y'all draw the fair value gaps, guys, make sure you draw them correctly and put your tool here at Fibonacci. Because as you can see, we had respect here at this key level. Someone say, Ryan, are we still at Oracle? I'm down 10%. I'm down 13%. I'm like, bro, like, I want to say remain calm, bro. My brother, like, lock in, like, everything's gonna be good. But I just want to say, listen, my stop loss, and I posted in the chat for you guys. My stop loss today on Oracle, I forget where I posted it. I think I said it out loud, but basically my stop loss on Oracle was at that key level, right? If we close basically above this FDG, I'll get out the trade. Or if we close above this top portion of my golden pocket, I'll get out the trade even earlier. But as you can see, guys, go back in time, we never really closed above that pocket. So what I did was, instead of taking a loss, I actually bought some more contracts. I bought the majority of my contracts here on Oracle up there. Put my stop loss right here, guys, on Oracle. And I targeted to be creating basically a brand new lower low below all these wicks right here on Oracle. And that'll be a 7-to-1 risk to our ratio on the trade. And you guys can prepare here on Oracle. You see, company came downtown, crashed, took out all those lows. And this is basically how we're able to smack the market today for, a cool little, 4,000, give or take. Now, I think my first trade was up like 2,000, I would say, on Oracle, like about 2,500. But then I ended up hitting them again later in the day for another 2,000. And end of the day at like 4,400, give or take, on Oracle, right? Now, the lesson, though, guys, on this company, as you guys can see, because I was able to capture this next move right here. So one of the strategies that y'all will learn a lot if you're like new here, guys, is we trade a lot of liquidity and we trade like a lot of market structure. So what that means is, as you're able to see here on Oracle, guys, what do you guys notice about this foundation right here on Oracle, right? I'm going to highlight what I'm talking about. What do you guys think about this foundation right here on Oracle right here? What do y'all think? Let me know in the chat what y'all think about this. Like, tell me, like, if I look at this place in this box, what would y'all say is happening here? Let me know in the chat.
Making like a cup.
Okay. I'll give y'all some time, guys. Some of just watching the screen, like, guys, even if y'all feel like your answer is wrong or you don't know what you're doing, or like, this is like, different for you, I want y'all to spend time to actually ask, even just answer. If you're wrong, you're wrong. We'll learn from it. If you're right, but let's keep on
I'll
learning.
pull back to the upside.
Okay. I'm seeing versus
Looks
the
like a change of
upside.
structure.
Yep, choose your character,
Change
inverse
of
gap,
character. Yep.
fib, liquidity from both sides, choose your character, cups, character. Okay. Burritos, okay. So
Ryan,
y'all,
this one what you're looking for, but it also touch the bottom of
your Fibonacci as well.
Now look, there's a lot of things that's happening right there. So first things first. This isn't what I was talking about. But if you look at this fair value gap right here, on Oracle from right there to right there, we boil it across. We also made a retracement into that fair value gap, right? But what I'm looking for mainly, guys, when I actually y'all this question, is we had a previous higher high here on Oracle up here, and then what happened was we ended up creating a low, which is like a higher low right here in price, right? Higher low, and then right here, what happened? We ended up taking out the high and creating a brand new higher high, right? So because we knocked out this high right here, guys, somebody that bought calls on Oracle down here, they're using this previous higher high right here as a method and in place to take their profits. So before y'all enter into a trade, the reason why people lose money a lot of the times because they don't know how to find liquidity, and they don't look at the market with, hey, what is somebody in the, because guys, you're in a game of trading of either you're making money or you're getting your money taken from you. So guys, who do y'all want to be, the money maker or the person getting the money taken? Who do y'all want to be, the taker or the giver of profit? What y'all want to be, man? I'm curious. Y'all want to take profit or y'all want to have your profits get taken from you? Who do y'all want to be, man? All right, the preset take. Okay, so
I
Tanisha.
got a question
All right. Oh, what's good?
on that fib for the buy side and sell side liquidity. Can I use that method on the 1 minute? Because I see you was using it on the 3 minute.
You can, but I prefer using it on a 3 or 5, just due to how tight the level is and the area is. I'd rather have like a more cleaner gap, and you have more room for that area when using a 3 minute or 5 minute gap typically.
Okay,
Okay.
understood.
But yeah, I only see like what, 1, 2, 3, 4, 5, 6 people out of 60 want to be profit takers. So 10% of people in the room want to make money. The other 90%, they're either in la land or they don't want to. They want to give their
Nah,
money.
we take it. We
All
take it,
right,
man.
all right, all right. I'm just making sure, man. Take that. Because look, man, guys, the billionaires, they're making millions of dollars every single day. They don't need any more of your money. So if you want to give it
We
to
want
them,
to rob the bank. We want to rob.
all right. I mean, I just wanted to make sure now, because if y'all want to make some money, I'm talking to the wrong people. But if y'all trying to make some money, I'm gonna tell you what to do. Before you guys enter into a trade, I'm gonna tell you what to do. You have to envision that somebody in the world right now is trying to take your money. You have a family, you might have kids, you might have a mom, dad, cousins, whatever. You can make money and take them on a vacation tomorrow if you hit a good trade today. But somebody said, no, 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 I want you to be behind on your rent. I want you to not be able to have a luxury dinner today. And you're just sitting there and saying, okay, nah. You want that dinner too. You want to live life too. So you got to always think in your mind before you open up a trade. My thing is, I imagine if somebody's in the trade like that I'm about to get into, like before I enter into a trade, I think about if somebody is on the opposite side of me, what are they thinking right now? If someone is already in the same trade that I'm about to take, what are they thinking right now? So let's say somebody took some calls right here, right? Because we made money on IWM puts after this move right here, right? I'm gonna tell you guys why. So somebody bought some calls, guys, right here on Oracle. They're gonna be targeting this high right here on Oracle. Right? They're gonna buy calls somewhere down there, stop loss price somewhere down there, and then be targeting the highs, guys, sitting exactly right here on Oracle, right? So when it happens, I want you to imagine like this: they buy calls right there, TP's up here, right? Guys, once they hit their TP, which is creating a brand new higher high, they're gonna probably move on with their trade, move on with their life. Maybe they might hold some runners, maybe they might put it in a trailing stop loss. So what that means is this area up here, guys, y'all wanna write this down. This right here is this basically called a buyer's block of liquidity, right? So you call it buy side liquidity or buyer's block of liquidity. Essentially, guys, people that are taking buys, people that are buying calls up here, they're turning into liquidity. So they're losing their money, and probably many of y'all have been on the wrong side of this move. I'm gonna tell you guys, one piece of information whenever you're trading can cost you 5K, 10,000, 20, 30, $50,000 of profits in the future, or even losses if y'all take it into consideration. So I need y'all to really understand this concept, right? I'm gonna say it again. Make sure y'all taking down notes. Before you open up a trade, I want you to imagine what is somebody who's on the opposing side of my intended trade thinking about? Because I'm looking for puts up here on Oracle, right? So what I'm thinking of here is, someone who bought calls up here is taking profits here at this higher high. And if we make a movement on this company on Oracle back below this significant high right here, I'm gonna draw it back across. This right here is a sign of a bull trap. And if y'all in the program for like a long time, we speak a lot about the turtle soup strategy. I won't get into it too much today because I don't want to confuse you guys. I know some of y'all probably already tapped in, but this is a textbook example of closing above a significant level of prices, as you can see right there. And then all the bulls are getting trapped exactly right there in price, while the move is going to be made back to the downside after you have a 1 minute candlestick closure below this high point right here in price. So what I did here on Oracle, guys, today, I went out to my 1 minute here on Oracle. I've seen that we're beginning to close a little bit below this line here, as you can see here on Oracle. And as you can go see right there, guys, let me press play. We came up right there. One more time. And what happened right here? We finally have created what, guys? Someone let me know into the chat. There's a few right answers right here, guys, but this is what we were looking at today, guys. Like what happened right here that Oracle just created right here on the 1 minute time frame. Okay. Massey, Massey on a roll right now. Yes, we're looking, guys, for a bearish engulfing candle. Very simple, very grade school trading. Like y'all probably think I'm gonna tell y'all some Ichimachu trading strategy, the Hakunachu, Indonachu, European suburban Atlantis, UPS, FedEx strategy. No, keep it really simple, guys. I promise you. The more simple your trading strategy is, like what you do for the most part, the more money that you make. As soon as you start thinking that you're just the Wolf of Wall Street, and you just got like you're Captain America, you're him, you want to just trade with the most, like that's when you lose your money. So one of the most important candlestick patterns that you guys do have to know about, which y'all probably all know about already, which is kind of like grade school learning and trading, is the bearish and bullish engulfing candlesticks. So a bearish engulfing, all that means is if I have small green candles right here, right, like a green candle body, the full red candlestick right here will fully engulf this full green candlestick, as you can see right there. Now, once you fully engulf this candlestick here to the downside, guys, it's basically like an indication to you that, hey, if I have multiple levels here of confirmation on my trade, and I finally make this engulfing candlestick, as you guys can go to see it right here, because we basically close right here below the body of the candlesticks sitting exactly right there. Now, previously, we had never closed any bodies below any of these candlestick lows until right here, we finally closed the body. So on this body candlestick, guys, this is exactly what I was looking for. I moved to the downside here on Oracle. And what I'll go ahead and show you guys here in a second, is we're targeting to get back below the lows of Oracle sitting down here. And if you press play on this company, you see this company end up crashing down crazily today. And we were able to actually maximize and capture this trade after that total soup entry, and specifically after that bearish engulfing candlestick here on Oracle.
And also, Ryan is respecting once it crossed the 9 EMA, it just retested a little bit that doji candle, and then boom.
Come on now, look, it gave you a good minute to say, hey, do you see
Yeah.
what's going on?
Yep.
Oh, you don't? All right, bet. Buy. Boom.
So
But at this point in
Ryan,
time, yeah, go ahead.
for a bearish engulfing, it doesn't necessarily have to be directly the candle right before it. It can be like a couple candles
Yeah,
before it.
of course. Because like what happens is,
Okay.
y'all want to write this down too. Like whenever y'all taking trades, guys, you're watching the market, you want to be evaluating what's happening. If like, guys, how many of y'all have been in the trade and then it's gone sideways? Like just send it on the chat. If y'all been in the trade and it's just going sideways, you're like, man, oh my gosh, like you like, man, can this move just happen? I'm tired. I'm tired, right? I'm gonna tell guys, when a trade is moving sideways, you want to do two different things. You want to start marking these candles, right? Figuring out, are we building a base? Are we building a level with a bunch of wicks, right? Whenever you guys see a bunch of wicks sitting in the market like this, for example, a wick right there. So let me draw it again right there, right? We have a wick right there, wick right there. We have wicks here, right? Wick right there. We have all these wicks right here. What happens is, basically, wait, hold on. One second. So you're seeing all these wicks right here, guys. And what y'all notice about these wicks is all of these wicks, guys, are sitting in the same general area. They're all sitting in the same little zone right here. This is a big zone, guys. So what you want to imagine this guy's ass right here. Let me make this white so you can see it. Guys, this wick area right here in the market, and I'll write this down, guys. This is where a lot of people's stop losses are in the market. Write that down. Wicks are showing you where people's stop losses are in the market. Because once you finally close below these wicks, you've been to close below the previous bodies sitting right there, right? You're now creating what we call, guys, is that bearish engulfing below this candlestick right there. And people's stop losses, guys, are getting rated right here. So right here is the pullback here to the 9 of an average trend Oracle. I saw this pullback. I was a little bit, I wasn't nervous, but I was like, okay, I got past my goal, but I know this is a good trade. I wanted to see this company make a reversal off this 9 of an average, which it did right there. I was able to enter as we're closing below this body right there and target this move to the downside right there and actually attack this previous structure right here on Oracle. Now this company came down a lot more, a whole lot more. It hit the structure right there. It hit it right here. Now it didn't get down there now, right? But it got oh, my bad. My fault, big bro. Oracle actually did come down here today.
Hey,
And
Ryan.
what, yeah.
Sorry about. So, what do you think about taking profit on your next hourly candle, like to the right? I mean,
You
to the
can do
left.
that. You can do that. But at the end of the day, you want to become, a good-minded trader and just focus on, putting in that trailing stop loss, right? For me on Oracle today, I didn't press sell on the company. I put in a trailing stop loss 10%. And right here, what time was this? 1:10 in the morning or 1:10 at nighttime today, right here. Here at 1:10, guys, they had took me out the trade. I believe I put in my stop loss and it came up a little bit. It took me out. But when it took me out, guys, it helped me avoid all of this nonsense right here because it took me out the trade. And I'm trading on literally poor Wi-Fi. I'm just out somewhere trying to eat some lunch. And because I had that trailing stop loss, guys, it enabled me to grow my profits from being only in profit at $2,500 today to end of my day at around $4,500 here in profit, right? So before we go any further, guys, we covered like a lot of things today. Realistically, number one, first of all, how to actually use your trailing stop loss, right? The benefits of the non-moving average, right? Helping you hold on to your winning trades longer. So let's say you're in a trade with the non-moving average. If I'm holding below this non-moving average the whole time, I'm gonna hold this trade. Look at this. But the first time that we actually close right here above this nine, look at that. We start chopping and make a reversal. So it shows you how to cut your loss quicker so you can maintain and hold on the majority of your profits. It also helps you minimize your loss window and also gives you an opportunity for a better entry and price point on a pullback right here where you can buy companies on sale and a discount. So we cover the 9-moving average right there as well. We also cover for you guys the pros and cons of a stop loss. Now, then we cover the chart stop loss right there, everything right there. Now, guys, what I'm gonna go ahead and do, so I'm gonna kind of cut. I was gonna kind of give y'all some game. I'm like, I'm gonna give you guys any fluff talk. I'm gonna give you guys literally all in the game. Things that y'all actually need to, help your, success go to the next level. So I'm gonna do it, guys. If y'all have questions right now about this class, um, the breakdowns, what we covered, it's time to actually reflect. You guys go ahead and put 1 to 2 questions inside of the chat, and I'll be answering you guys personally. And if y'all want to raise your hand to ask a question on the voice chat, you can go ahead and ask your question on the voice chat after you raise your hand. But y'all put your guys' questions into the chat so you can go ahead and answer them. And I'll go get started with the first question. Okay, so for the trailing stop loss, let's say you put it at 10%. Okay. Does it automatically move your stop up for you as it's going up, or do you have to move it yourself? So basically, with the trailing stop loss, well, as I kind of mentioned, right, AI is the future right now, and it's taking over the world. So with your trailing stop loss, imagine, like I mentioned, it's like an AI robot, like an agent that's basically watching over you and your trades. So whenever you're in a position, it's helping you actually manage your risk, so you can actually go enjoy life, do what you got to do, and then it basically will follow behind you in your trade, which is why it's called a trailing stop loss, because it's trailing you. It's on your trail. It's on your ass, right? Makes sense. All right. So boom, that's how you answer that question right there. Let me go on to the next question that we got right quick. All right. How to close a trade when you take a trade with paper trading? So basically, you just go ahead and click on the trade, press sell to close, and you get to sell it right there. All right. I have a full video inside of the mentorship document if you want to go ahead and review that as well. Full video on how to actually trade on Webull step by step for beginners, especially on paper trading and mobile. I posted it right here on YouTube. If you want to watch it, it should be definitely very helpful. If you haven't seen it yet, I'll post it into the chat so you can watch it. I don't know how, but it went pretty viral. It got some views, like 4,000 views, kind of cool. All right. So Mill said, how come after we took out those higher highs and consolidated, how will we know if we are going up or down before the engulfed candlestick, or do we patiently wait on the engulfing? Because there are wicks above those candles as well. That's a good question, bro. So for me, the reason why I was suspicious and was aware of the move to the downside because my overall daily bias on the company was bearish, primarily because the high time frame told us swoop right here earlier here on Oracle, and we were able to disrespect that 4-hour high, the daily high, and then we had to respect here at this fair value gap right here on Oracle. We had a strong move to the downside. So my high time frame bias was already bearish. So once companies create new higher highs, a lot of times people are thinking it's time to buy calls, when people that bought calls are actually taking profits on their calls at the higher high that was created. And then what happens is when people take profits on calls, it brings the price down in the market because people want to look for puts. So after we close basically below this same draw liquidity, which is the high basically sitting right here in price here on Oracle, I love the closure, but the closure below that level was a bearish sign for me, and it aligned with my high time frame bias and allowed me to take a good trade with good risk management. Like even if I were to lose this trade, it was great risk management because I entered basically up here on these oracles, had to stop here, the midpoint here, this level right there, and I was attacking the low right there. This is a 2-to-1, and down here was a freaking fat trade. This is a 6-to-1. So, Mr. Patrick, but go ahead and answer your question. But I see with your hand raised first.
Yeah, I had a question. What's the best way to like mark out historical levels on certain stocks, and also kind of like figure out more psychological levels for each of the stocks?
Yeah. So let me show you how to do that real quick. Basically, you want to keep it very straightforward, very clean, very smooth. So like you look at a high time frame, preferably the 4-hour or the 1-hour or the daily. And let's say we're looking at Oracle, for example. Let's say we're on a fresh chart. Then clean all of our draws off the chart. You would be marking levels like this, right? This is a significant level here on the 4-hour. This is a 4-hour high. Boom. Mark it right there. This is also a significant high here in the 4-hour. Mark it out. Boom. This is a significant low right here. Significant low right there as well. These are all swing lows right there. All right. This is a pretty cool low, but not very significant. You just want to basically find key levels in price where we're seeing bounces or we're seeing like levels of rejection from, and how the market has like respected that levels or violated them in the future. So I marked right here because as you can see right here, we had a retracement cleanly off this high right there. So the market couldn't close above this previous high right there, and a strong move back to the downside. So and then at some point in time, you will actually begin to actually trade towards those key levels. So I do this level here on Oracle for the day. You go over to your daily here on Oracle, we close above this same level right there, and then back below it. So that's kind of how I mark my levels typically.
Appreciate it.
Yes, sir. Go ahead and answer the question now, CJ. Get the question.
All right. So it might be a stupid question though, but do you think like the trailing stop loss will work for like a small account though? You know what I'm saying? Like, you know what I mean? Because it seems like I just seen it, you'll drop, $40 and come back up, you know what I'm saying? Right over that. You know what I mean? Like I just seen it happen a few times. So I was just wondering if that still would benefit a small account.
Yeah, so you definitely can, right? Because if you have a small account, you're dealing with one contract. So when I showed you like the example of the trend stop loss, that was on one contract, or that's on a contract, But if you have 1,000 contracts, it's still down to that one contract. So how you trade one contract is the same way that you trade 1,000 contracts as well. So, whether you're in a small account or a large account, you should definitely be all right and it should be smooth.
Okay. All right. Appreciate it.
Yes, sir. Yes, sir. I see you asked your question, Effie.
All right, quick question about turtle
Wow.
soup, because I want to make sure I'm not getting myself confused. So, can you go back to the chart where you were showing the turtle soup?
Yeah.
Okay. So, I understand that like if you close above a previous high and you need to close back below it, are you closing back below the previous high candle or the high that was just created?
Well, I'm sorry. I was like half reading questions. You mind asking them again?
No worries. So for the turtle soup method, whether you're closing like let's just say we're in a bullish market, right? And you close above a previous high, and then we're supposed to wait for it to close back below. Are we closing below the previous high or the high that was just created?
So this line that I drew is basically like this previous like 4 hour high, and then the blue line is the high here on the daily. So this is the 4 hour high right there, and as you kind of can see, this high has been held as a level of resistance, as you can see right there. You go to your daily time frame. This is my daily high right there. So basically, once you actually close below that high, that's basically what I'm looking for the total soup because we're well above the previous highs, cool. But like we've never really been up here to the zone up here on the Oracle in a long time. So now that time has kind of surpassed, it's time for history to repeat itself. Because last time we were at this high here on Oracle, we had to move to the downside. So right here, because we close above here on Oracle on our time frame, and then back below it on a small time frame, we can basically use like that volatility, and then our bias can be bearish on the company on the higher time frame. And then on a low time frame, you can come down and you take trades down the lower time frames.
Okay, so it'll be closing above and below the previous high.
Right. So
Not
basically,
not the
yes, sir.
high that was just created. And then like if it was a bearish market, we would be closing above the previous low.
Right. Exactly.
Okay.
Exactly. Well, in a bearish market, you want to actually be, so a bearish market like this, you want to be closing above this high and then after that back below it. And then in a bullish market, let's say this right here is the low of the day, a 4 hour low, whatever.
Yeah. Okay. I said it backwards,
Right.
but I get you. I'm with you.
Right.
Okay. Thank
Good
you.
question. Good question. So Ashley says, why would the trading apps close you out of a trade you're in? I remember you were in a trade on IWM or one of the other trades you said that took you out of the app. Yeah. So basically, that's what I say. So I can't talk. That's what I say. Basically, is the benefit of the trailing stop loss is it actually will trail your profits behind you. And once the margin of profit has closed, to say it's 10% for your stop loss, it will automatically pull you out the trade. And I'll probably say 80 87% of my past trades from today and further have been taken out by a stop loss or by a trailing stop loss, right? I take it out myself a lot of times if I'm trading like SBX, or let's say if I'm in a trade, I'm up 20% profit and I want that scalp. I don't want to, I'm taking that myself. But most times when I'm looking to capture a trade, I have a really, really big risk to reward ratio. I'm looking for a bigger take profit. And that's why we make so much money trading odds, because we're looking for a bigger margin of profit with a smaller stop loss. So what happens is I'll put in my trailing stop loss. Well, let's say I put a 10K into a trade, for example, right?
Mm-hmm.
Let's say we're up 30%. So we're up 3,000 on the trade, which comes pretty easily. At that point in time, I could go take off $7,000 that I put into the trade and leave the 3K remaining as a runner. Now, with the remaining $3,000, I might just go ahead and put in a stop loss on the trade now of 10% for the trailing stop loss. So because I'm up 30% on the trade, right? If you have like a little wheel right here, right? We're up 30%. This is zero. This is a horrible line. Okay. This right here, this is zero right there. This is 30%. So let's see right here, you have 30% on a trade right here, into 30%. Now my trading stop loss is going to be at 10% from 30%. So my trading stop loss will be sitting right there at 20%. So now if this trade come back down from 30%, now basically back down to 20% right there, it will then pull me now out of this trade officially. But if we move up to, 40% or let's say 50%, which is right there, right? My stop loss is going to still be 10%. So now 10% of this whatever is at 5%. So now it'd be 45. So the stop loss right here, guys, it slowly will actually appreciate and it will move with you in price from 20% now to 45%. So when it hits it, it puts you out the trade automatically.
Now, is a stop loss like a limit to how much loss you want to? I don't know if I should say set for a trade. Like I'm trying to be sure I know what stop loss actually means.
Risk management.
So
Okay.
I want you to say the word stop loss, but after you say stop, I want you to wait 5 seconds and then to the next word.
Stop loss.
Okay.
Stop the loss.
Yeah, stop the
Loss,
loss.
stop the
That's what
loss,
I'm
the
thinking.
loss.
Okay.
It's really to help you, it's really made for you to stop losses. Like,
Yeah.
but especially when I'm in a winning trade, it's gonna stop your loss. If you're up $1,000, it's gonna stop you from taking your profit out at a profit of $300 when then you could maximize and lock in $900. So your stop loss is the $100 little level right there to keep you in a trade and make sure you're maximizing your profit.
Oh, okay. To help maximize your profit. Keep you from losing out on more profits, basically.
100%.
I see. Copy. Okay.
Yeah, Joseph, you should have access to that welcome spreadsheet, especially if you're inside the mentorship program.
Okay, and I had one more question. So if we have a small account and we're managing our account with the 20-20-20 rule, once we're up 20%, do you recommend that we then set our stop loss at 10% or?
Yeah. So what I typically recommend is that 20% is a great margin of profit that helps you see it, consistency over time. Now you want to make sure you can lock in some. So let's say you have 5 contracts in a small account, right? I would take off like 2 or 3 cons at 20%, and then my remaining 2 contracts, I'll put in a trailing stop loss on those contracts. So I can basically see possibly more profit. But if we pull back, I've locked in some gains. Right. Some people argue to put a stop loss in the whole entire position. I personally enjoy them lock in a portion of gains guaranteed. So if we were to drop, I'm only taking a stop loss on some runners rather than the whole entire bag. Because the whole bag could be a lot of money. Like 20% on like $10,000 is $2,000. Some people have $2,000 to blow. $2,000 is a lot of money. So I might lower the trade and take some profit and then put a stop loss on my remaining runners. So you kind of can get creative over time.
Okay, thank you. And then the strategy that you showed us earlier with the non-moving average as well as the fair value gap and the Fibonacci tool, what's the name of that strategy? Does it have a name in particular or?
Wait. Can you ask the question again, bro? Like the name of the strategy, putting other things together?
Yeah, because you said that it was like one of the
Yeah,
strategies that you
yeah,
utilize. I didn't know if it
yeah,
had a particular name like
yeah.
turtles or.
We actually have a video in the bands replay tab, the Zoom replay tab right here, under advanced videos. Go right here. It's called revealing one of our elite bands trading secrets. I didn't give it a name because I want to kind of make it like it's yours. You know what I'm saying? But if you want to know a name, it's part of the bands trading secrets, volume 2. The volume is volume in it right now. We have a couple strategies in the chat that we use that have been working for a long time and it make a lot of y'all profitable. So how do you make it Fibonacci like yours minus 6 rows to the 5? So go to the chat, go to the bands chat, guys, and go up here to pin messages right there. And you can now scroll down here and you'll find my Fibonacci settings right here. All right, so this is all my settings here for the Fib. Take a screenshot of this page if you want to make your Fibonacci like ours. Makes it really clean so you can see those, golden pockets really easily. All right. Anytime, Mario, let's drop game. I feel like trailing stop loss is gonna make a lot of y'all profitable. Y'all start, putting it to work as soon as tomorrow now. Come on now. So I understand trailing stop loss. My only issue is I can't find it on Webull. Whenever I click on to close of one of my orders, it instantly takes me to a second screenshot. Yeah, so like he mentioned, you want to make sure you're on the proper Webull that gives you access to this trailing stop losses, right? That's gonna be called yeah. So you want to get off the Webull Lite version. This is a big question one of my students had for me today as well. Cammy, she's here today. about Webull Lite. Kenny, right now you're on Webull Lite. You need to ask ChatGPT, hey, how can I get off Webull Lite? So I will show you in a second, but I'm gonna do that after this class. I don't know how to do it right now. Current issue. Yeah, you want to also update Webull as well. 100%. 100%.
Hey Ryan, sorry, man.
Yeah.
So I downloaded Discord on my desktop and try to but I don't see your Discord right here. Just on my phone. Is there any way I can fix it? Like that way I'm in the class on my PC.
Oh, you're asking like how to see more contracts?
Like I downloaded the Discord on my PC like recently, and I wanted to log in on your Discord from my PC, but it's not showing me your Discord.
So I recommend to just log into your account on the Discord on your PC so you can be on there. If you have questions about that, I would just like hit me up outside like so I can help you like set it up. But typically we do live calls on Zoom, so you're able to like watch it there. So that's what I would recommend personally.
Okay, got you.